As traders, we take on risk for gain, but you must be able to embrace that risk unconditionally. If you can't, work out why not. There is no in between. So it's late in New York, and I'm pretty sure Vitaly is dreaming of $250 end phase. But some news came out that recently hit the crypto market, and that caused me to kind of go back and look at some charts as I go and dive deeper into it and revisit some of my price projections and see if we're on target with what I'm looking for. If you're new to our channel, welcome. We're happy to have you here. And if you're not, if you're one of the 503 subscribers of our channel, thank you so much for your support, your comments, your messages, your suggestions, your feedback. It's amazing. It's great. We've had a wonderful time doing this. We love doing this. And please, before we go any further, please hit the like button, hit subscribe, and hit the little bell. If you like this kind of content, it really helps us out. It helps the algorithm push the videos out to more people, build a community of freelancers that are looking to take control of their finances, and help us all make better informed decisions. So again, please hit the like button, hit subscribe, and hit the little bell. So today I wanted to discuss a little bit the news that came out of China today about them banning all cryptocurrency, as well as Bitcoin and Ethereum's current price action, and comparing it to what we saw in 2017. That was a tweet from Bob Lucas on September 24th. If you don't follow Bob Lucas on Twitter, you should. He's one of the premier voices on crypto. He's helped me so much over the last year to help me capitalize on the peak of the 4-year cycle bull run. And what he's saying is 100% true, whether it's stocks, whether it's real estate, or even crypto. And today we had an example of just how risky this could be. Of course, what I'm talking about is the news that China banned all crypto. Bitcoin and Ether slide as China intensifies crackdown on cryptocurrencies. The price of Bitcoin had dropped roughly 11% as of noon Eastern time, while the prices of Ethereum and Dogecoin had fallen roughly 12 and 18% respectively. I think it's interesting to note that when Bitcoin dropped 11%, Ethereum fell a little bit more. The loss was slightly amplified off that. And I mean, Dogecoin was virtually double. This decline comes after the People's Bank of China said all crypto-related activities are illegal. Services offering trading, order matching, or derivatives for virtual currencies are strictly prohibited, the PBOC says, while overseas exchanges are also illegal. After we had bounced back off of what everyone believed was the September low that we were looking for on the 21st, Bitcoin took another hit on that news and dropped down to 42,000. And Ethereum dropped to about 2,900, they're saying. Are we supposed to be worried right now? Is this the end? Are they killing our bull run? This is where Ethereum's at now. Did this news kill the bounce back from the uptrend? No, I mean, I don't think so. Just even by looking at the charts, I don't think that that's the case. If we look at Bitcoin over the same area, again, we went over this, I believe, in our last video. But no, we're nowhere near the bottom trend, the bottom of the trend line. And the bottom of this trend line, what is this trend line here? This trend line represents the low that we saw, which was of 37 or what, a 40% decline when we touched 29,000 back in July. It's that trend line. That's the farthest that Bitcoin or Ethereum has moved off of that trend line since the peak that we saw in April. So what I was looking for is the range. This is the range. And so the range between this and this, we went down 54%. That's a good drop. That's a fairly good drop. We needed that to shake some people out. We'd run up a bunch. As you can see here, we ran up a bunch from from December. I mean, December to April, we went up 70%. It makes sense. We came back down 54%. Cool. Now we bounced back. Supposedly, this is what everyone thought was the bull trap following the bounce back, which did happen on September 21st. We saw the big pullback followed by a small recovery, and then the real pullback. A lot of us felt like this. We saw this first pullback, but a lot of us felt like that wasn't enough, or it didn't stay there long enough. It had just hit the all-time high the day before. To come back down so quickly after running up so much just didn't feel real. And so this reversal here, this fake out reversal, seemed like it was genuine until it wasn't. And then, I don't know about you, but a lot of people I know and myself got back in here, not necessarily in Bitcoin, but in Ethereum. We were waiting for the bull trap, and it's one of those times when it actually worked out. So what does this mean? This has happened before. I mean, here's an article on Cointelegraph. Sound familiar? September 2017, China Bitcoin ban sparks 20K all-time high in 3 months. The latest debacle over China anti-crypto stance has a firm historical echo to it, and old hands are more than aware. I think this guy says it best on Twitter. John Satoshi Wick. The same thing happened in September 2017. China said they were banning Bitcoin and it dropped by over 30%. But Bitcoin made a full recovery in a few weeks and then hit new all-time highs in December that year. As the saying goes, history doesn't repeat itself, but it sure does rhyme. Remember, the name of the game is conviction. If you don't have high conviction in the assets that you're purchasing, you're not going to know what to do when things don't go according to your plan or according to your perfect situation. And that can be on the upside or the downside. You get conviction by studying. There's no way to skip this step of the research, digging, doing the research, and also running the numbers. And that's part of what I want to do here today too. This is Bitcoin's current chart right now. This is Bitcoin 2021. And I basically have the chart starting from October of 2020 when it really started to heavily accumulate towards the end of the year, which led us to 42,000 in what, 3 months? Remember December, January? Yeah, that was insane. And this is Ethereum. It's important to note that Bitcoin really started to take off in December, and Ethereum was about a month later. That's also going to be important. I know we have to talk about Doge, and we're going to talk about why those numbers are important too. So this is where they're at right now. As I'm trying to figure out what's going to happen with Bitcoin over the next couple of months, one of the things that I'd like to do is to go back to historical data. What benefit is there about looking at stuff in the past? So there's basically the three things that I look for if I'm trying to compare present to the past are the timing of the events. If the timing of the events, timings of very similar events happen either year over year or in cyclical years like with Bitcoin, I'm going to take notice of it. It's not to say that these are determining factors, that these are things that are going to tell you what to do, but they're just things to keep in your head. They give you something or to compare the current situation to see if there's anything that you can derive from there that could inform what could happen next. The second thing that I do is similar price moves. And that's generally tied to percentages because unless you're, I don't know, unless it's a stable coin, in general, it's not going to stay. Or if you're AT&T, right, the price is going to fluctuate over time. So it's not specifically about dollar amounts, but more about percentages. If you have events that are occurring in similar times with also similar price moves, which I see a lot of in crypto, and we're going to get into, I start to take notice. Here we are in 2017, September 13th, 14th, we hit the September low. And we didn't see that price again until September 7th in 2018, so roughly a year later. And that is after Ethereum that year ran up to $1,400. So from this point here, we 7x. Here we are in the current cycle. This is Bitcoin in 2021. And my argument here is that what we're seeing here, this double top that led to our July low and our September low, whether it's this one or the previous one, it's this. Boom, boom. I'm proposing, and from this point in the year, from this point, we ran up 600% in 4 months. And Ethereum peak, what was that? Looks like January 14th, somewhere. I thought it was the 17th, but somewhere around there. From the June 2017 peak, roughly $415, we came down 67%. So let's compare that to what we saw just recently. So the recent local high was up here at about 43.81, and that first July low, which was the lowest low that we hit, what would we get to? 61% in 2017 at the same time in the year as it's doing right now. We're 5 or 6% off here, but I think that to me is well within a margin to allow them to be compared. And so if Ethereum September low was $2,666, and in 2017 we saw 596. Now, okay, granted, there's a 6% difference between the drops, but still, I mean, that to me begs some sort of comparison. This was the July 20th low, which was like the low. And we wanted this low to be higher because we wanted to feel like it was still in an uptrend. Had it have been a lower low, or had it come down off, in the 1600 area, it would have just broken trend, meaning that this trend line here is creating the bottom of the channel, and the top peak, this trend line is creating the top. After another 2 months, that's this equivalent level of 1600 is the same as if we would have hit 2300 that day. It was the bottom of that channel. If we actually go and revisit the same price, that's going to be a bit crazy, because I'm seeing a correlation in the dips. I'm expecting some correlation in the highs, both in timing and similar price moves. So again, all of the expectations for our cycle highs or our 60-day cycle highs and lows have been hit, and they've been respecting the same basic percentage gains. So what can we expect to see from here? Well, we saw that after Ethereum hit that September low, it essentially started a slow accumulation phase. And I mean, it was going for a long time. You're talking about September, October, November. I mean, basically no real movement for about 3 months. And then you start seeing volume increasing. You can see that there's a clear jump in volume as we get into November. And my theory is why that is, but essentially what we see here is somewhere in the middle of November, we start to see the volume picking up. But we're also seeing that the price action isn't moving much. To me, this is telling me that investors are trading places. This is people taking out profits, but you're not seeing it because it's being buried by all of this buying. And this to me is the part where the mania is starting. You're starting to hear it on the news. You're starting to, when your coworker at work that never talks to you about stocks or investing starts to ask you if you've heard of this, this crypto thing, that they're now tapping into that wave of retail that drove this thing. Now, again, there's going to be institutional investors are going to have a play in this, but the truth of the matter is we can't get to the market caps that Bitcoin and Ethereum need to be for us to see our expected returns. I mean, anyone that's looking for $100,000 Bitcoin, it's not going to happen from retail investors. It's going to happen from institutions that are coming in and essentially piling in on top of each other with retail, piling in each other with retail, and it happening globally at the same time. That's the only way we're going to hit those prices. So I'm expecting more volatility than usual because we're going to see the effects of their trades more. So I could see fake out high highs just from a massive purchase feeling like it's gone parabolic. And again, this is not to say that this could be part of the strategy that they have. So that to me is where the timing of these events are important. We've already talked about the relationship between Bitcoin price moves and altcoin price moves, and in general, they're a higher percentage. They're amplified on the top and the bottom side, but the timing of the events are also in tandem. So here you see Bitcoin. This is Bitcoin in 2017, and what you can see is Bitcoin started its run up in November. Again, after we didn't get into Bitcoin in this particular video, but essentially Bitcoin did the same thing. After the September low, it started an accumulation phase. It was a lot more volatile at the time. Until it touched the bottom of the trend line at around, what was that, November 17th at 5,000. And from there, it just shot up. That's when it started to go exponential. And Bitcoin peaked December 17th of 2017. Where was Ethereum on December 17th? So this is what Ethereum was doing on the 17th. I mean, you can see not much happening. It wasn't a particularly interesting day. And it ended up peaking 27 days later. So here you are, nothing special happening in Ethereum on December 17th. Meanwhile, Bitcoin has hit its all-time high of 19,000 and change, almost 20,000. 27 days later, Ethereum peaks. So let's go back and let's look at Bitcoin in 2021. The peak here happened on April 14th, 64,000. That's where it was. It was on April 24th. So let's see what was happening with Ethereum on April 24th. There's April 24th. And again, nothing really happening that day. April 24th, nothing really happening that day. But from that day, how many days was it to the peak? So Ethereum peaked on May 12th. Ethereum peaked on May 12th. That was the day that it hit its current all-time high of 4,300 or 4,400 and change. So let's look at what Bitcoin was doing on May 12th. On May 12th, Bitcoin dropped 15% while Ethereum was hitting its all-time high and selling off. But I mean, it did touch 4,300. You could make an argument that some of this money was finding its way into Ethereum. We had to come off 3 peaks, 3 attempts to break out of the channel, finally collapsed. 3 attempts to break out of this channel, and then finally collapsed, and on its way back up, what was that? There we go. On the 12th, it just fell another 15%. Why is that important? Bitcoin was not making all-time highs when Ethereum was. Bitcoin's all-time high at that point of 64 and change happened on April 14th. So April 14th to May 12th, how many days is that? May 11th, May 12th, it was 27 days. And so what are we trying to say? Right now, what I think's going on is if we pull up the moving averages, what I think's happening is we're seeing this Ethereum chart is a mess because the 50 days above the 21 day and the 100, and then we have the 300 day. What we have is here the 50 day just crossed on top, just crossed over the 21 day, so it's now in the top position. It's not an ideal situation. Do I think it's going to last long? No, I think it's going to bounce back fairly quickly. I think it's going to recross and correct itself. Ethereum really likes to be, it really likes the moving averages to be parallel. You can see the really nice price action and accumulation you get when that moving averages just stay together. You can see, and any time that they touch, you get a crazy amount of volatility that leads to wild price action, and then it trying to get back to that medium happy place. We're still in that point where it's trying to, and I actually think it will for a little while. I feel like we're going to see something similar like what we saw in 2017. If we just come into here to the same time period, what we can see is when Ethereum hit its September low, at that time it was September 17th, we saw just really nice, steady accumulation all the way through November. It seems like we're going to be into a 3-month period where crypto's just going to go dormant for a while. It's going to seem like it's going to be asleep. And why are we saying this? I'm saying this, to me, they're more like milestones. I keep seeing confirmations of the same, roughly the same pattern, price movements, both events and percentage-wise, repeated. And because we know that the stock market is not doesn't happen in a bubble, and it's not run by computers, and it's not automated, it's still people deciding what to do with their investment in this asset, people being cyclical and creatures of habit. I'm looking more to see if the patterns, if the way that 2017 played out is going to have can inform us as to how 2021 is going to play out. It's almost like the stock market is like a seismograph that reads the general movement and the rumbling that was happening in that asset class at that time of the year. And what we're looking to do is see if the quakes that we're hearing now are similar, if they're similar of an event, and if they are, what can we expect? When can we expect the big movement to happen on the high and on the low side? Because of the correlation that we're seeing in Bitcoin and Ethereum's price movements, independent of each other in 2017, comparable to what's happening in 2021, in addition to seeing the movement between them, both in the timing of the events and the percentages being similar, as crazy as it sounds, it appears like we're going to repeat the same timing of events and roughly the same percentages. As we saw, we only dropped 61% this time off of the May high to the July low. And in 2017, we dropped 67%. So maybe it'll be a little bit less. And that makes sense simply because we're in larger market cap status. So in order to move Ethereum the same percentage as you did before, you just need a lot more money, which means you either have whales. Now we have whales in addition to institutional investors. If we just map what we see in Bitcoin, for example, at 2017, snap a ruler from here to there, there's the low, and here's the peak, 19,000. We're looking at 646%. 646%. So this is 2017, and that took 86 days. Wow, 3 months. So essentially 3 months to the day of the September low, Bitcoin popped December 17th. I mean, look at that. It's just beautiful. Again, because the drop in price from the June peak to the July low was 6% off, 6% less this year, we can just say 640%. 29,253 times 6.46, or we can go to 6.40 just to account for some deviance. We get a price of $187,219. So in a nutshell, we're looking at a 640% increase from the September low to a price of $187,219 by mid-December for Bitcoin. And we're looking at a price of Ethereum at $15,862. All right, so if we map the timing of the events in 2017 along with the price percentages to today's current movement, give or take a small margin of error because they're different price points and they're at different market caps, what we come away with is Bitcoin is set to increase 640% from the September low that we see. And again, that's currently being tested right now, but that would put us, the Bitcoin's price at the September low that we're calling is 29,253. A 640% increase from here would put it at $187,219 by mid-December. For Ethereum, what we're saying is off of the September low that we saw, Ethereum September low was $2,666. And from that low in 2017 to the peak in January 2018 was 596%. And so you take the 666, you take the 2,666 and multiply it by the 596%, and you get an Ethereum target price of 15,862 by mid-January, we would say. So thanks for watching. Please like and subscribe and hit the little bell. We're going to continue to watch this. All you crypto holders out there, we're in this with you, and we're in this to win it.